3 years ago, artificial intelligence was just another exciting tech trend. Today, it has become the center of the entire American stock market. Companies connected to AI are exploding in value overnight. Investors are pouring billions into anything labeled artificial intelligence. And Wall Street analysts are calling it the future of the global economy. But behind all the hype, something dangerous may be forming. A financial bubble so massive that if it bursts, it could shake retirement accounts, 401ks, tech stocks, and even the entire U.S. economy. The question nobody wants to ask is this: are we watching the biggest AI bubble in history right now? Over the past 2 years, AI companies have seen stock prices rise faster than almost anything we've ever witnessed. NVIDIA became one of the most valuable companies on Earth practically overnight. Tech giants started investing hundreds of billions of dollars into AI infrastructure, data centers, and advanced chips. Suddenly, every company wanted to add the letters AI to their business model because investors were rewarding anything connected to the trend. It started to feel very similar to previous financial manias in American history: the dot-com bubble, the financial crisis of 2007 to 2008 housing bubble, and now, the AI bubble. What makes this situation even more concerning is how emotional the market has become. Many retail investors aren't buying AI stocks because they understand the technology. They're buying because they're afraid of missing out. Social media is flooded with people claiming AI will replace millions of jobs, create trillion-dollar companies, and make early investors rich beyond imagination. That kind of excitement creates dangerous conditions inside the market. Prices begin rising faster than actual profits. Valuations disconnect from reality. And eventually, investors stop asking whether companies are truly worth the price they're paying. Right now, some AI companies are trading at levels that even experienced Wall Street analysts are struggling to justify. Investors are betting on future growth that may take decades to actually happen. Meanwhile, the Federal Reserve continues dealing with inflation concerns, high interest rates, and economic uncertainty across the country. Americans are already facing expensive groceries, rising credit card debt, higher mortgage payments, and growing fears of recession. If the economy slows down while AI stocks remain massively overvalued, the result could be brutal. History shows us that bubbles don't collapse slowly. They collapse suddenly. During the dot-com bubble crash, billions of dollars disappeared almost overnight. Companies people believed would dominate the future completely vanished. Retirement accounts were destroyed. Investors who bought near the top watched their life savings collapse within months. The same pattern can happen whenever hype grows faster than real economic fundamentals. And right now, many experts believe the AI market may be entering that dangerous territory. But here's the important part most people miss. A bubble crashing does not mean artificial intelligence itself will fail. The internet survived after the dot-com crash. In fact, companies like Amazon eventually became stronger than ever. The same thing could happen with AI. The technology may absolutely transform the future, but that doesn't mean every AI stock today deserves its current valuation. There's a massive difference between revolutionary technology and irrational investor behavior. And that's exactly where the danger begins. Big institutional investors are already starting to move more carefully. Hedge funds are reducing exposure to certain tech stocks. Analysts are warning about excessive speculation. Even some billionaire investors have quietly started increasing cash positions while the average retail investor continues chasing AI hype at record prices. That's often how bubbles work. Smart money becomes cautious while everyday investors become more aggressive. By the time fear finally enters the market, it's usually too late. And if an AI bubble crash actually happens, the effects could spread far beyond Wall Street. Millions of Americans have retirement money tied to the stock market through 401ks, IRAs, and index funds. A major correction in AI and tech stocks could impact household wealth across the country. Consumer confidence could drop. Spending could slow down. Layoffs inside the tech sector could rise even further. In a worst-case scenario, it could push the U.S. economy closer toward recession territory. Still, not everyone believes a crash is coming. Some analysts argue that artificial intelligence truly is the next industrial revolution and that current prices are justified because the technology could completely reshape business, healthcare, finance, cybersecurity, and even national defense. They believe we're only seeing the beginning of a massive economic transformation. And they may be right. That's what makes this moment so unpredictable. Nobody knows exactly where the top is, and nobody knows when investor sentiment could suddenly change. What investors should focus on right now is discipline. Emotional investing has destroyed more wealth in America than almost anything else. Chasing hype without understanding risk can be extremely dangerous. Smart investors look at valuations, company earnings, debt levels, cash flow, and long-term sustainability instead of blindly following trends. Because when fear and greed take over Wall Street, the people who stay calm are usually the ones who survive. So, is the AI bubble about to crash? The truth is, Nobody can say for certain. But history teaches us that whenever an investment trend becomes this powerful, this emotional, and this expensive, risk always follows close behind. Artificial intelligence may absolutely change the future of humanity, but even revolutionary technology cannot escape the laws of financial reality forever. And if this bubble finally bursts, the consequences could become one of the biggest financial stories America has seen in years.